Hello everyone, welcome to Elliott Wave YouTube channel. Today is Friday, January 21st. The time is around 2:30 a.m. GMT. Today we're going to be looking at the euro dollars. This is 60-minute chart here. So let's take a look here. We ended with 4 in the intermediate degree at 1.148. And the structure, the subdivision is as an ABC. As you can see in the minor degree red color right here, and the B here is in a triangle. We can see in the D and E partial view here, and then the C is in a 5 waves up here. Now we have started to see the next leg down, and we are looking for the downside as long as we stay below 1.148. So this is a short-term view. We are not going to be talking about the longer time frame on the longer direction, okay, but from the short-term point of view, we're looking for the downside while it stays below 1.148. So this is the key level for now. Now the arrow, as you can see, is still turning down, and the reason is we have not broken below the previous low, which is the 3 in blue. So if we zoom out, this is the 4-hour time frame. So I'm gonna put the C and 4 right here in the 4-hour. Okay, and we can see right here, this is our B, right? This is our B right here, and that will be in a triangle, some sort of A, B, C, D, E, right? Uh, so that means the A must be somewhere here. Yeah, this is a complex structure like this, and then that has to be our 3 then, right? So that's the way we make sense of the count, even if we don't see every single count in the shorter time frame. Okay, now first of all, let's notice a couple of things here. When you look at the cycle from this low, it does look corrective, right? It does look corrective. You can see from here, it looks 3 swing, which is correction. It looks, sideways. An impulse will not look like this. If it is bullish, typically you don't see the movement like this. Sideways range like this is not indication that this is an impulse. So overall, when we sold off from this low, from this peak, this one also, so far it looks to be some kind of 3 swing, right? Some kind of 3 swing overall. So you get choppy, overlapping, and no extension and so on the third swing. That is usually indication that it is still corrective. So from that perspective, then it does make sense for now at least, that we are still looking for the downside. Now of course, whether or not we will go to new low, it really at this point, that's why you can see the arrow is turning down, is because from here we need to break below this previous low to confirm this is done. Otherwise, this can always become a WXY, for example, or it can become something else. It can become a diagonal, or it can become a nest and things like that. But at least if you want confirmation, then yes, we still need to break below this low before we confirm that we're not going to be doing another double correction and rally again. But like always, the key really is to identify the right area to trade. uh, like there's always a confusion among people that every single swing, every single forecast is something that is tradable, which is not true, right? Even when we are forecasting the path, we understand there are alternate paths all the time, right? And so that's why it is important to have a trading system to sort of improve your chance, and you only play, you only enter when the chance or the edge is in your favor, right? Now, for example, in the case of the euro, let's say if I'm trying to sell rally in 3 swings, because that's the idea, you only sell when you believe the trend is bearish, you only sell in 3 swing. So you got a very ugly sort of sideways here in the triangle. But let's say if I want to measure A relative to the B, now you can see it hit perfect 100% here, right? Perfect 100% extension. So that's why if you believe you have it is bearish, if anybody sold it from the 100% here, then it doesn't matter whether this is doing a double or not. At this point, it doesn't matter anymore because your position will never lose. You already move your stop loss. You already take partial profit maybe by this time. So there's no worry if the count changes into double correction or whatnot. So that's why trading in the right side is extremely crucial if you want to be profitable, right? So that you can manage your loss well, manage your risk, and then improve your edge whenever you trade. Because count changes is normal. I mean, it's as if when the count goes wrong, as if, oh, the forecast is bad. It's not. Nobody's gonna have it 100% correct, and because there is always alternate path in Elliott Wave and the market, right? So here, going back to this 1 hour time frame, we should be looking for the downside. Now, in the shorter cycle, we can have a couple of different options. For example, we could have ended one here instead, and then do a bigger rally instead of just this small rally. We do a bigger risk rally to correct this decline, and then going down again. So that's one possible path. And then another possible path is gonna be is basically doing a double correction. So we can do double like so, right? Doing double like this. Now for the time being, again, the rally from here, it doesn't look impulsive so far. So so yeah, so still the odds is still in favor to the downside so far as of today. Now it may change, of course, but as of today, based on the structure here, the odd is still favoring for the downside. Now shorter cycle, then we know that as long as the rally stays below 1.148, we should be looking for the downside. Potentially this would be a 1-2. In that case, the rally should fail below here for the downside, but if this is your 1, then we can get a bigger rally before we go down again. Okay, so for further updates, you can always check our service. We update 1 hour chart 4 times a day, and I'll see you all again next week. Have a nice day, everyone.